I'm here. Welcome back and let's get it popping. You know how I do. Now we're going to talk about 75 for all. 75 for all. I'm going to tell you exactly how important that 75 for all is in just a second. All right. So let's get on started. All right, y'all. So for generations, home ownership has been on a huge decline. All right. Why is that? All right. But let's just talk about it. So 80% of baby boomers are people who right now today are in their 60s. So 80% were homeowners. All right. Then when we get to Gen X, those are people like in their 50s. Now, you know what, 70% of them were homeowners, right? We see it right here. 70%. And then when we get to the millennials, we're way down here, y'all, to 50%. And then right here today, let me tell you the shocking statistic about homeownership today. All right. Inequality in the U.S. home ownership it's a disgrace. It's embarrassing, right? Our black ancestors would not be proud of this, y'all, for real, because we have access to become a homeowner and we're just not doing it. So as you can see right here, 44% of blacks are homeowners, 49% of Hispanics are homeowners, Asians, 60% of them are homeowners, and non-Latino whites, 75% are homeowners. Now that is what the 75% for all means, because we want equality. All right, 75% of all people should be a homeowner. Okay, and the reason is because it's access to wealth. Home ownership is access to wealth. Now, if y'all know me, I like to throw in personal experiences so that people can relate better. But I'm going to tell you, I helped a homeowner to buy a property a couple years ago, and they paid like $240,000, and within 2 years they had gained $200,000+ in equity because the market had shot up so much. The values in the area had increased. They had doubled. All right, that is how and why home ownership is a gateway to wealth. All right, because when we move from a rental property, guess what? Guess how much we getting back? $0. So let's get back to the seminar. I just like to hit you with some real information, some real experiences. So disparity in homeownership rates is a major factor in exploding wealth gap in the US. Now, if you agree that there should be 75 for all, drop a 75 in the comments, y'all. This is serious. So drop a 75 in the comments. Come on. Now, let's get it going, because I want to value your time, and I got to keep this under 30 minutes, y'all. So, what are the top 3 barriers to owning a home? What are the top 3 barriers, y'all? It's credit. All right? So, credit. The average credit score for white Americans in 2023 is 716, black Americans 677. 15% of blacks and Latinos in U.S. are credit invisible. What? All right. And so, also, another barrier is no cash flow. Nearly 60% of Americans don't have enough savings to cover a $500 unplanned expense. All right. And then lack of financial literacy, y'all. So lack of financial literacy cost Americans a total of more than $436 billion in 2022. Oh my God. All right, let's keep it going, y'all. So the vision of 75 for all, it came from these two gentlemen right here, George Newberry and Chet Seeley. All right, so in the next 5 years, their goal is to help 1 million people become homeowners. They want to empower consumers with AI-enabled tools to resolve credit reporting errors. All right, we want to identify the tools to help people handle their money. All right, we want to train and mobilize community loan officers and title reps, okay, to empower the people. All right, so now they are from Hispanic, they are Hispanic descent, so they do have experiences with, inequality. All right, so let's talk about the real the real cost of renting. Because I'm going to tell y'all, I be very active on Facebook and social media, and people will argue you down about how renting is better and how home ownership is bad because of this and because of that, and you got to fix stuff. Guess what? When y'all call a landlord, they ain't doing nothing but going on Google to find somebody to come and, snake your plumbing or, stuff like that. It's not hard. And once you become a homeowner, you get accustomed to it anyway. So, how much will you spend renting in the next 5, 10, or 15 years, y'all? How much? How much you gonna spend? Type it in the comments. I want to know how much you think you will spend if you don't become a homeowner. Because let me tell you this. If your rent right now is $1,500, then in 1 year, you're going to have paid $18,000. In 5 years, you're going to have paid $90,000. In 10 years, $180,000, y'all. All right. How many of y'all know for a fact you could have bought a house for $180,000? Even especially, in Ohio, Indiana, Metro Detroit, you can still buy a house for $90,000 in some areas. Okay. If your rent is $2,000 right now, all right, in 1 year, you're going to be at $24,000 and, so on and so forth. So again, y'all know I could get to rambling, so let me keep this going. Now, credit impacts your ability to purchase and own more than just a home. All right, so low credit scores, this is what happens. All right, this is how low credit scores affect you, whether you're a homeowner or not. All right, so it's harder to apply for an apartment. They are even looking at credit scores. They want to make sure you got, to rent, y'all, to be honest, because I do property management too. To rent, it's just as hard. Let me just say this. I got to come on screen. If you can rent, you can definitely buy. And I do property management, so I know these landlords, these big property management companies, they want you to make 3 times the amount of rent just to rent their place. So don't tell me you can't afford to buy if you are renting, especially if you're paying more than $1,200 a month, right? So some other ways that low credit scores affect you is you get higher interest rates for loans and credit cards. It could affect some job applications, especially if you're an accountant or somebody in finance. All right, you get fewer loan options with credit cards. Your insurance rates could be higher. You get what I'm saying at this point, right? So let's move on. All right. So did you know that errors on credit reports are extremely common? All right. So using an AI-enabled platform, you can dispute credit report errors. You can do it yourself, y'all. It's no more having to pay somebody to do and fix your credit for you. I've been trying to do credit education for a few years now. And so I would sell credit repair ebooks and give out a lot of credit tips. But now, I partner with a company where people just come in and just get the software yourself, right? Go in, fix your credit, and boom. Next thing you know, you're a homeowner and you're helping reduce that statistic, right? But you can dispute foreclosures, auto loans, evictions, repossessions, credit card balances, bankruptcies, all of that. Okay. Now, let's talk about how credit bureaus determine your credit score. All right. So your overall behavior affects your credit score. So people like to talk a lot about credit scores, right? But what about credit history, right? Now, what we mean by credit history is I have seen people say, oh, I'm so tired of that credit card, or I always forget about this particular credit card, so I'm just going to close it. Don't close it. Do not close that credit card. All right. That is a part of your credit history. That is very important. All you want to do is just remember, put yourself a reminder in your phone, but remember to use the credit card maybe once a year for gas, and then boom, pay it right off. You want to keep it active because that is a boost to your credit score. Okay. Now, but from my perspective, this is what's the most important right here. Credit utilization. That is what's really, really important. Now it says, yeah, oh yeah, your payment history is extremely important too, but credit card utilization, because let me tell y'all. So I've been in this situation many times where I've had maxed out credit cards. When you got maxed out credit cards and you apply for a loan, they're going to be like, nope, because you maxed out over here. Even though you might need the credit because you maxed out. But that's when they're going to say no. So some people don't even know that this is a factor. So just remember, if you have the ability and you have a credit card that's $2,000 with a credit card limit, be sure, keep it under 30% utilization. Like, keep that balance under like $600. Keep it under that, because it really helps to build your score. And if your credit card is 2,000 and you're always at 2,000 or at 1,900, it's going to negatively impact your score. All right. So that's just a credit tip that you could share with a friend or a relative. All right. So let's talk one more time about empowerment for mortgage readiness and the AI credit technology tool. Now, what is this AI credit technology tool? All right. It's cutting edge AI algorithms. It dissects your credit report swiftly. You don't need to know about credit repair. You simply upload your credit information into the software, y'all. And then guess what it's going to do? It's going to provide tailored, customized dispute letters, and it's going to send them out. Okay. So you can't beat that, right? That is worth it. Because you know what? And even before we move on, I just got one thing to say. Did you know that when you are renting, now this is why I say if you are renting, you definitely can buy. Did you know when you're renting, you're at least paying $400 minimum more than you would if you bought a house in that same neighborhood or if you bought that same house? Did you know that? Drop in the comments if you knew that or if you did not. Drop in the comments, y'all, because let's be interactive. Let's educate some people. Did you know? Because some people don't know that, you're throwing a couple extra $100 out the window. All right. You're paying a couple $100 for somebody else to search Google when the house needs some type of repair. And then long story short, if you get a house that, has just been completely remodeled, it usually takes a few years before you need anything anyway. So I'm telling y'all, it's easier than you think to be a homeowner. But one more time, y'all, let's talk about this AI powered credit repair membership. Now, what does it do? All right, well, let's talk about some important things it does, okay? So, first of all, student loan debt. How many people got them student loan debt? I know I do. Drop in the comments, student loans. If you want your student loans forgiven, I keep waiting on Biden to forgive my student loans. It ain't happened yet, but his fingers still crossed. So, put a finger crossed in the comment. If you got your fingers crossed waiting on Biden to reduce and forgive your student loans. But yeah, so this AI empowered software can help you with student loan debt solutions. It can provide you monthly credit report and scores. All right. It's going to give you 1 million identity fraud insurance. It's going to give you access to will and trust information. So let me tell you this. Now, so many people, nowadays talk about, oh, put your investment properties in a trust, because then, that is the way to build. Now, that's really the way to build wealth. But, put your property in a trust. Some people say that so that they can sort of hide who the owner is, right? Because we don't want everybody knowing everything we own, especially all of our properties. So you get access to that. You get access again to the AI dispute technology. You get a debt analysis and budgeting tools. And let's talk about health insurance, y'all. You get access to low-cost health insurance. So I know that I have a lot of entrepreneurs that are my audience. My audience are entrepreneurs independent contractors. If you don't have low cost, affordable insurance, guess what? You can get it right here, right now. All right. And this is a value at $1,500, but you definitely not paying that. Y'all know I do the research so that I can get you the best deals always. So what you would get to become a member, it's a one-time setup fee of $149.90 and only $89 a month. Now, what if you're cool with the $149, but you don't want that $89 a month? Let me tell you right now how to get rid of that $89 a month. Now, once you bring on, once you start showing your friends and family how your credit got fixed, guess what's going to happen? They are going to want to know how you did it. So when you bring in 5 customers, clients, or referrals, your $89 fee, it goes away. It goes absolutely away, y'all. It's gone. Zip, disappeared. Now, let's talk about a few testimonials. All right. So right here, Miss Kawina Walker. Now, as a single mom a single mom and an active athlete, all right, she had some credit challenges. She felt embarrassed and could not become a homeowner, but she joined the movement of 75 for All. And guess what? She quickly was able to repair her credit and became a homeowner, y'all. Let's put some claps in the comments, y'all, because we want to celebrate each other, because you might be next, or your sister might be next, or your cousin, or your loved one, right? So 75 for All, y'all. Join the movement. 75 for All. So let's talk about Mr. Rod Farrell. All right. As a finance manager in the auto industry, he actually faced credit issues himself. Can you imagine, y'all, the person that is helping you to buy a car running your credit and his credit ain't even right? All right. So, that's like me always talking about becoming a homeowner, and I'm not a homeowner. So yes, no matter what field you're in, let's get our credit right, y'all. 75 for all. That's all we're saying. 75 for all, y'all. Let's empower each other. All right. So again, credit impacts your ability to purchase and own, a home, and so much more. So 75 for all. Now, right now, drop a 75 for all in the comments. If you got any questions or comments about the homeownership program, drop them in the comment section, because right now I'm finna show you how to make more money. All right.